Hey, what's up, guys? Welcome back to Trade with Modupetemi. I want to share with you guys a very powerful strategy. Actually, I've been working on this strategy for for a very long period of time, and I just decided that let me just share it out for you guys. All right, let me share it out for you guys. So, the strategy goes like this. If you actually want to enjoy this strategy, you need to the strategy works perfectly in a trending market. Don't forget that in financial markets we actually have this. In financial market we actually have two. In financial markets we have two major type of markets. We have the what? We have the trending market, which can actually be an higher high, right? This is for an uptrend, and the what? Right? And then we have this, which is actually what we call a ranging market. So if you really want to enjoy this strategy, it works perfectly on either this or this kind of market structure. Markets, right? This kind of market structure. So it works perfectly in a trending market, right? It works perfectly in a trending market, right? So that means either in an uptrend or a downtrend. As you can see here from my charts here, as you can see here from my charts here, we're actually in a what? This is a replicable of it that we're actually in a downtrend. You can see we have higher high, higher low, higher high, higher low, higher high, higher what? Higher low, higher high, higher low, higher high, higher low, higher high. So it works perfectly, and you can see that at every key point, we have a what? We have this. At every key point we have this. You can see. So the strategy works perfectly in a what? In a trending market, right? And it's actually a strategy that you can actually use and hold the trade for a long period of time, right? It's no longer a scalping strategy. You actually, for since the trending market strategy, trend following market strategy, you can use it to hold the what? Hold for a position. So what I would just advise you guys is that you just fund your account, or you just practice with a very reasonable lot size, that you can really work with, right? You can work with. So meanwhile, if you are yet to subscribe to my channel, please hit on that red subscribe button and turn on and subscribe to my channel, then turn on the bell notification so that you stay connected and updated when next I'm dropping a new video, right? So let me go direct. So the strategy you can actually use it on what? On 1 hour time frame and 15-minute time frame, right? Basically it's going to be working with your what? It's going to be working with, you are working directly with the market structure. So you are working directly with the market structure. So basically you are going to be working with 1 hour time frame and probably 15-minute time frame. But if you are going to be going down to 15-minute time frame, a lower time frame, then you really need to what? You really need to master your what? Your candlestick pattern, right? Your time frame combination. Because now a little rejection that you see on 1 hour time frame, right? A little rejection that you see on what? On 1 hour time frame might actually be a serious trend. Now look at this is what I'm actually saying. Look at this area here. This is what I'm telling you, that if you are going to be going to a lower time frame, you need to to master your market structure. Look at this area that I draw out here. Like you can actually see that on 1 hour time frame here, we're on 1 hour time frame here. You can see that on 1 hour time frame is just a little retracement. But by the time we go down to 15-minute time frame, what you are going to be seeing there will be different. And then by the time you see that kind of reaction, you felt that your analysis is wrong. You can actually see what we have here. See what we have here. Right? Can you see? Now by the time you see this strong bullish candle, you are actually going to say, oh no, it's actually a breakout, right? And for those that use trend line, now, you can apply that here, right? You can apply that. You can have the confluence of what trend lines trading strategy to it, right? You can have a confluence of trend line trading strategy. So if you are going to be going on on a lower time frame, ensure you will have perfected your candlestick pattern very, very well. Right, ensure you understand the pros and cons of your candlestick pattern very well. Like more or less, like when you see a doji on 1 hour time frame, you should know what you are going to be having on higher time frame, right? So let me share the settings for the strategy. Basically, we are going to be using two indicators. Right, we are going to be using two indicators. So the first one is going to be the period is 20, shift is 0, method is exponential, apply to apply to close. The style, you can actually use any color of your choice, but if you want your chart to look like the way it is, the way mine is like, so you follow this pattern. So you can make your style to be 3 pixels, and then your color to be to be red. So once you are done, you click on you click on done, right? Then you click on the S again, you add another indicator, another moving average, which is actually the period is 10, shift is 0, method is exponential, apply to apply to close, and then the style now is going to be 3 pixels. Why the color is going to be the color is going to be gray. So once you are done, you click on done, right? So the final indicator we're actually going to be using is our MACD. Actually is the default setting for the MACD, right? So the fast EMA is 12, slow EMA is 26, MACD SMA is 9, apply to close, main 2 pixels. You can use any style of your choice, or if you want your chart to look like mine, you can actually use violet or deep purple, or how you want to call it. Then the signal line is 1 pixel. The signal line is 1 pixel. The signal line is 1 pixel, and you can make it 2 pixels. You don't really need that, but once you are done, you click on you click on done. So guys, this is the confirmation now. This is the confirmation. Remember that the first confirmation I told you is that this is a trending strategy. The strategy works best in a trending market. So if you want to use this strategy in a choppy market, honestly speaking, you are going to have a serious problem, and you might end up blowing up your account. So to be at the safer side, if you really want to enjoy this strategy, make sure you're actually applying it to the market when the market is actually in a trending market. So as for the trending market, it can be in a downtrend, and it can be it can be an uptrend. The choice is left for you. So now this is what you're actually going to be looking out for, right? Remember I told you it's actually a trending market strategy, and if you want to enjoy this strategy, use your 1 hour time frame. Right, use your 1 hour time frame. You can actually use it on 15-minute time frame as a scalper, right? As a scalper, but if you really want to enjoy it and you want to enjoy it, that you can have peace of mind, you trade without fear, then use your 1 hour time frame. Right, use your 1 hour time frame. So this is basically the confirmation we are actually looking for. So we need to wait for for the green moving average to actually cross. Now this is it. Now for an uptrend, this is what we have in an uptrend. We have higher high, higher low, higher high, higher low. So in an uptrend, in a bullish market condition, you need to wait for the red moving average to actually cross above the red moving average will actually cross above the green moving average, right? So basically now the green one will be the one that will be at the top, while the red is going to be the one below. Now look at this. This is the pros and cons of this strategy. Now the green moving average actually the method the period is 10, right? Why the red moving average actually 20. Right, so now while we are actually looking at why we want the green one to be at the top side, is actually the reaction. You always see a fast reaction with the fast. So this is a fast EMA, right? And this is a slow EMA. So once you have the slow EMA below, all right, below, and then you have the fast EMA above, this is actually telling you that you are in an uptrend. Right, but the reverse is going to be the case on downtrend. In downtrend now, the green is actually going to be below, while the red is going to be above, right? So the green will always tell you, the green moving average will always tell you your what, your bias. It's going to give you your directional bias. It's going to give you the what, the market structure of your what, of your chart, of your analysis. It's going to tell you the what, are you in a bullish market or you are in a bearish market. So once the red moving average is, once the green moving average is actually below, right, that means you are a what, you are in a downtrend. But once it is above, you are in a what, you are in an uptrend. So, and if you observe very well, and you can see that by the time we have that, there will always be a what, there will always be a support. There will always be a support, just like we have it here. Look at. So these are the words, these are probably the entry you can add to it, right? So once you confirm that, now the first confirmation is that it has to come from your higher time frame, preferably your 1 hour time frame or 30-minute time frame, right? So once you ascertain that now, and you remember that if you are in an uptrend, that means you want to be buying. It works perfectly on boom and crash, but mostly crash 1000 and boom 1000, right? Other pairs it works with it, like volatility, but that is going to be a lot of one, just with a little modification, which I'm going to be dropping very soon. A modification when if you want to use it on what, on volatility, right? Meanwhile, if you are here to subscribe to my YouTube channel, hit on that subscribe button and turn on what, subscribe, and turn on your bell notification, and do well to what, to share with your friends. Let just what, let enjoy this financial freedom and make Deriv and be a profitable trader. So the first confirmation we are actually looking at for is this now, right? Remember that I've actually given you the what, the logic behind the what, the two EMAs. One is a fast EMA, one is a slow EMA. So the slow EMA has to be above. If the slow EMA is above, that means you are in an uptrend. If the slow EMA is below, that means you are in a what, you are in a downtrend. So once you have this now, so once that is, so that is the first confirmation. The second confirmation now is that it's coming from our what, our MACD. The second confirmation is coming directly from our what, from our MACD here. And what we are looking for on our MACD is just to make sure that these candles here now, these candles, this bar that we're actually seeing, if you are looking for a buy, it has to be above this zero line, above this zero line. But if it's going to be a sell, it has to be below this zero line. So here now, this is the what, this is the downtrend. So you have a lot of more crashes. This is crash 1000. So once your EMA, right, crosses each other, you will cross each other at this area here. You can see we have the crossover here, right? What do? You look straight down to your what, to your MACD, to give you the final confirmation. And you can see your MACD is actually at what, at below the zero level, which is telling you that the MACD is confirming your what, your bias for you, that is actually in a downtrend. So you can what, you can enter for what, for a sell. And now if you are entering for a sell, now this is where your candlestick pattern comes in place, right? So you can actually see that at this area now, which is going to be your entry here, at this area now, which is going to be your entry, you can see the what, you can actually see that now this red candle, let me enlarge it, let me enlarge it so that you can see. This is, remember, this is where our what, our confirmation is coming from. Let me mark it out so that once I enlarge, you can actually see. So our entry candle is going to be on this doji here, on this doji here. Okay, so let me enlarge it. So this is going to be our entry what, entry candle. You can see now, this is the psychology behind it. You can see that when the market, right, so when the market actually what, touch this more, this our slow EMA, when this market actually touch our slow EMA, you have the crossover here, you have the crossover here, but you start observing from what, from here, right? So when this crossover happens here, you can see that your what, our grail moving average, which is our slow moving average, actually there was price actually goes below it, right? You have the crossover here. You have the crossover here, right? You have the crossover here, right? So you can see this is where we have the crossover, right? And what do you see? Look at our MACD. Look at our what? Look at our MACD. You can see that at our MACD now, this is what we have. Oh, let me read it. What will I read? Okay, I can't actually read. Oh, sorry. So this is where we have our what? Look at our MACD here. Right, look at our MACD here. Okay, let me just since it's not reaching up, let me use let me just use a vertical line. Right, let me use a vertical line. So we have the crossover here. You can see our MACD is what? Look at our MACD. Our MACD is actually what? It's showing the what? It's at 0 level, and it's what? Look at it here, right? It's below the what? The 0 level, which is confirming for you. Now, this is where your candlestick pattern now comes in place. Now, you can see at this crossover now, there's a weak rejection, right? There is a weak rejection showing you that the buyers, the sellers are actually coming into the market. The sellers are actually coming into the market. So this is what your weak rejection told, which is what your candlestick pattern is actually telling you here now. Look at this weak rejection, right? Telling you that there is a what? There is seller in the market coming into the market. Look at your weak rejection. Look at the second one. And with all this weak rejection now, none of it, price did not actually close above the what? The slow EMA, which is our what? Which is our 10. You can see the weak rejection is below you. So once you have that confirmation, you have that rejection, price closing below it, that when price goes below it, that is giving you confirmation that you can actually enter for what? For a sell. All right, you can actually enter for a sell. You can see price did not close below it, and your what? And in our MACD, it's actually showing a 0 level, right? So you enter with a very reasonable lot size, right? So to be at the safer side, you can actually what? For your take profit now, you take profit when you are convenient, right? You take your profit based on your account size. You take profit based on your account size. You take profit based on your account size, and so you take profit, or invariably you can actually look at the market structure and what? And take your profit. Remember, your entry was actually here. When you have this BMS here, this is break in market structure, you can take your entry. This is another break in market structure. You can actually take your what? You can take your TP. This is another one, right? You can actually take your TP, right? Based on market structure. Based on your market structure. So guys, backtest very well. Let me know in the comment section if you have any issue, or you message him directly on WhatsApp and join my Telegram group. Until then, let's just keep making Deriv, right? Let's make in there. This is another example for what? For a buy. This is another example for a buy opportunity. This is another example of what? Of a buy opportunity, right? So let's look for a buy opportunity. Now, it's going to be very difficult for you to really have those entries here. Why? Because you can see your MACD. This is actually a strong bullish trend. So if you are catching it, you have to catch it from the what? From the beginning of the what? The trend. So you have to catch it from the beginning of the what? Of the trend. A better way you can cut it is going to be at this crossover here, right? You can see your MACD. So a better way for you to cut is going to be at this crossover here. So guys, do well to do your backtest very well. Make sure you backtest very well on your demo before moving live to your what? To your live account. And if 1 hour time frame is actually convenient for you, you can just go to your what? To your 15-minute time frame. But on 15-minute time frame, you really need to what? To understand your internal structure. There's what we call internal structure in what? In based in market structure. So you need to understand your internal structure very well and understand the confluence between your time frame blending now between 15-minute and 1 hour time frame. So guys, do well to do backtest very well. like the video, subscribe to my channel, and do what, and comment. This is the way you can actually what, reciprocate back the good work to motivate me to actually drop more interesting comments. So guys, see you next again. Right? See you next. Let's just keep making the reef.